Welcome to the Savvy Dentist podcast with Dr. Jesse Green, the show where great dentistry meets great business. Listen in each week as we bring you an inspiring person who will share their story, ideas and business techniques to help you create a practice and a life you love. And now introducing your host, Dr. Jesse Green.
Hello everyone, it's Jesse Green here. Welcome back to SavvyDentist.com and to the Savvy Dentist podcast. It's terrific to have your company for another episode of the show. Now, for those that are new to the podcast, I want to say welcome, and I want to also invite you to take advantage of another resource, the sister publication to the podcast, and I'm referring to the Savvy Dentist magazine. Now, in the magazine, we talk about a bunch of different things, but all of those things are designed to help you grow and scale your practice. So you have a greater income, you have more fun, more enjoyment, more free time, all those things that you got into business for. We know that the market is changing. We know that dental practice owners need to be abreast of these things, and we know that the needs of the market are becoming more sophisticated. So we've got to keep up with what's going on, and the magazine is designed to help you do just that. We have columns from all different kinds of people, whether we're talking about HR, we're talking about marketing, we're talking about IT, we're talking about tax and property and wealth creation and all those other things that go into creating great practice. To have the best information gives you the ability to make great decisions, and it's those decisions that are going to power your future. So the resource, the magazine, is totally free. All you need to do is head across to savvydentist.com /magazine, grab yourself a copy. Whether you want the print version or the digital version, they're both free. And if you want the print version, we'll obviously post that out to you. If the digital one is more your style, then you can download it as you go. But all you need to do, as I said, is head across to savvydentist.com /magazine and grab the magazine. And we hope you enjoy that. Now, today I'm joined by Ian Walsh, who is a Senior Relationship Manager at Medfin. And I asked Ian to join us because I've had lots of conversations with people recently talking about finance and not quite being sure how to approach getting loans. Some people are looking to buy commercial properties, some people are looking to buy practices, some people are looking to buy second practices, or even refinance what they're doing already. So I invited Ian to come on and talk about the general principles around finance approvals. We're talking things about anti-money laundering laws, what sort of financials you need to have in place, all that sort of stuff. He's going to walk you through all those requirements. Now, whether you work with Medfin or someone else, this is going to be generally very similar. And of course, I need to point out to you that this is not specific advice. It's general conversation. It's general in nature, and you need to take advice from your trusted advisors around you, whether that be accountants, lawyers, and other people, of course, as well. So this is general information for general purposes, and I hope you find it really helpful. Ian is a really generous guy. He shares openly, shares very freely. And as I said, these principles apply no matter which finance company you use, and I hope you find this really helpful. So without any further ado, here's Ian Walsh from Medfin. Ian Walsh, welcome to the Savvy Dentist podcast. How's things up in Brisbane, Vegas, mate?
Oh, it's 17 to 26 today, so beautiful weather. I'm really honoured to be able to talk to you and to your listeners about what we're talking about today. It's I've heard of all the different people that you've had talking on the show, and to be in the same group as that, I'm honoured. Thank you.
Well, mate, it's our honour to have you here, and I've been looking forward to this for a long time. And you and I have known each other for a long time. We were just talking off air that we first met in Brisbane, and as we were getting ready to relocate to Canberra, I remember you coming around to our house in Paddington, actually, and sitting out on the back deck there and helping us get organised with our paperwork and all that sort of stuff so we could get back to Canberra and buy the practice that we now have. So we've known each other a long time, mate, and in that time, though, things have changed, right? The market is different, the banking rules and regulations are different, the needs of the customers are different, and I thought it'd be really useful to talk today a little bit about helping people get prepared with their finance. Now, of course, you're a senior relationship manager at Medfin, but I guess the principles we're going to be talking about today are fairly general. So please, ladies and gents, please understand this is general conversation. It's not meant as specific advice. You need to consult your various advisors and other people before you take action on these things. So we're just going to have a general conversation about finance. Is that cool with you, Walshy?
Fantastic. Thank you.
All right, mate. So I guess just to begin the conversation, what have been the changes over the last few years that have kind of reshaped the requirements from the bank's point of view in terms of lending and giving finance to people from a business point of view?
In terms of the last few years, I think the biggest change has been that people are doing less and less face-to-face interviews. I find that as I did with you, that if you have those face-to-face interviews, you really form a relationship with the person that you're dealing with. You don't just talk about their requirements, you talk about them, and that's the basis of my career, I suppose, is that I like to meet all of my clients face-to-face. The biggest change that's happened in the last couple of years is to do with the Anti-Money Laundering, Counter-Terrorism Financing Act. It's actually changed how you start an application process and the requirements that the financier needs to do it. It doesn't only impact new applications or new clients, it's actually having a retrospective effect on existing clients. So I had a client who had a structure set up 40 years ago, and we had to go back and get new information to satisfy the government requirements. The big thing there is we can get your identification quite easily for you personally, be your driver's license and your Medicare card. And we can actually do those electronically now using a new approved form that gets sent to you as an e-doc. So that's usually very easy. That gets cross-referenced with the government site, gets a green tick or an X, right? The situations that you often find where the ID doesn't match up, hyphenated names might be an issue. People who have an undisclosed middle name or a double last name, they may not cross-reference properly. People who have their birth name on their driver's license, but they've adopted a different name since they've come to Australia. You'd be surprised how often we actually have to do. And that just means that we have to either go through different steps. We have had situations where we've needed clients to actually go and change their driver's licenses with the Department of Transport to be able to actually proceed with a loan. That's the first step. Yeah, that's individuals.
So just on that, I guess the other one that probably comes up is married name, maiden name things come up. That probably comes up a fair bit too. But just to go back, what's the purpose of the anti-money laundering rule? I think it probably sounds self-evident, but I guess there's a reason for it. What's the big reason?
Yeah, I'm not an expert in this field.
That's okay.
As in, I know what I need to do, but it's really the government are trying to reduce the amount of terrorism financing, et cetera. All of the things are probably bad in the society.
Yeah.
And if they can actually drill down to find out who the beneficial owners of these different entities are, and the beneficial owner means owns more than 25%, then they can actually potentially link it together. I don't know how I'd say it's the federal police are probably working behind the scenes with all of the information, but it's about making sure that we know who owns what. And if you get a corporate structure that's got multiple layers, like you'll have a company who's got a company as trustee for a trust as a shareholder, and that company has another company as trustee for a trust, and it can go out to be 20, 30 people required to provide identification to understand the true ownership of it. A lot of those organisations that do the wrong thing, they do this on purpose. They actually try and make it complicated to hide the fact. But once again, I'm not an expert on the back end side of it.
No, that's just me being curious, George. So I guess for most people listening to this, they're just going to need to go through the process of identifying themselves properly, making sure that their driver's licenses and their other documentation matches up and marries up accordingly.
Yep.
But that's from the personal ID point of view. What about from the other side of the fence?
Sure. And this is where it becomes really fun, is that if you told me that your company was ABC Proprietary Limited, I can't actually tell you what identification being for whatever entity, being company, trust, or individual. I can't tell you what identification I need until we've done a company search.
Right.
Because the company search will say, this person is the directors, these people are the directors, this person is the secretary, this person or this company or trust or whatever is the shareholder. And it's to the point, it's a bit silly actually, is that on the asset company search, if it is a trust, so if it was Jesse Green Proprietary Limited as a shareholder, and it would say beneficially held yes or no. So if they're beneficially held, they're owned by Jesse Green Proprietary Limited. If it's beneficially no, it's owned by a trust, usually, or on behalf of another entity. Then once we've done those checks, then we can actually ask the accountant who the trust entities are.
Yeah.
So if you know the corporate structure really early and do the searches with your financier really early, it brings everything days forward.
And that's really important. If you've got a time frame you're working to as well, those days and weeks make a big difference. So I guess the first thing we've spoken about there, mate, in terms of progressing a finance application, we've got to make sure we're compliant with the anti-money laundering legislation and the anti-terrorism legislation, and that's through proper identification processes. What else do people need to be ready for? Like when someone comes to you and says, hey, I'm thinking about this practice, I want to buy XYZ dental practice over here, there, or wherever it is, what else do they need to be ready to have on hand?
So I'll just clip back 1 second. You talked about marriage. We need to get an official marriage certificate in the event that they change the name with the marriage.
Yep.
It can't be a ceremonial one. So with a company, when we're identifying a company, really quickly, easy, we need to do our asset company search.
Yep.
And then for any entity that's got a trust, we need a certified copy of the original trust deed. So that's that part of it. They're all the parts to do with the AML requirements. But in terms of what can they do to prepare themselves and get ready and talk to us, so the first thing that I'd always recommend is surround yourself with trusted advisors, because those trusted advisors should be able to make sure that potential roadblocks don't come about, right?
Yeah.
So that's one of the things I pride myself on. I actually look at what is the end game, and then I work my way back and kind of like say, where's the stumbling blocks here that I can see that we can potentially overcome before they cost you money, But talk to your financier as early as possible, because different types of applications will require different types of information. An application that's consumer credit code regulated, which would be like home loan or a personal loan or something like that, there's a different set of documentation requirements for that than there is for a commercial property loan or a business loan. So when we are assessing a loan, the big 3 C's are the things that come into play.
Okay, what are they? C
is for character. Now, if you're a dentist and you don't have any defaults on your credit history, then big tick for a C. You're a doctor, doctor, dentist.
Yep.
You got the DR at the start. That's a big tick for us. Your historical transactional banking and stuff like that does get factored into it, but the credit check's clear. That's a big tick for the character. We look then for capacity. So we're looking at how much money do you make. We look at things like what's your asset and liability position that's backing you up. Capacity is the ability to be able to repay it.
Yep.
And then the third one is collateral. So that might be a house, a security, or it might be a charge over the car or a charge over the business. So from that, I'd say that a good financier should be able to kind of like give you an indication as to if it's going to progress quite early once they've gathered that information about your asset and liability, how long you've been doing what you're doing, but there'll be a lot broader information required depending on which path you take. So a car, it's a tick and flick type of transaction. A commercial property or a business loan to buy a practice, we're going to need to run through business plans, understand what you are trying to achieve, how you're trying to achieve it, and work with you towards getting that. And I think I've said this to you. I like to understand what a client's motivations are and what they're trying to achieve end game, so that if at any time in the future you come back to me and ask me a question that conflicts with that discussion about the end game, then I can say, well, hang on, has your priorities changed? Or are you aware that this conflicts with what you've previously said? So,
And that's similar to what we do as well, in the sense of what's my ultimate goal? What am I trying to achieve here? And then let's work back from that, and let's make sure that if there's any glitches or any things that don't seem to add up, then let's talk about that and make sure we're making choices consciously. I wanted to ask about what sort of how many years of tax returns and finances and all that sort of stuff, because I know most people's, hopefully, fingers crossed, most people's finances are relatively up to date. I'm sure that you probably see the whole gamut of things.
Yep.
But from your perspective, is it 1 year, 2 years, 3 years, 5 years? How many years of financials are you looking at?
For a consumer credit code loan, you'll always need 2 years as a minimum.
Yep.
if you're buying a practice, I'd always say that you want to get 3 years from the practice that you're purchasing. The reason I say that when it's looking at a practice that you're purchasing, 1 year gives you data, 2 years gives you a trend, 3 years gives you a pattern. So you're actually seeing the pattern of what's happening with the business, the income, the gross margins, your net profits. You're seeing where there's potentially extraordinary payments in the expenses that don't happen every year, or they're very large 1 year, or the costs of dental supplies went massively up in comparison to your gross margin. So that's the things when you're talking about buying a practice. When you're looking at an application, this is where it becomes a bit tricky, okay? So we can only rely on the most recent financial data being 18 months old.
Yep.
Now, it's now the 7th of September. So I would say most people would have done their 2022 tax returns. How old are they now?
Oh, 15 months now, really, aren't they?
15 months.
At the time of recording, yeah.
Yeah. So when would the next financials be required to be done, the 2023s?
Within 3 months.
Well, that's in a perfect world. Most of the time, they don't have to do it with their accountant until March, April next year. So effectively, when we get to January 1, the financials from 2022, they're 18 months old. 18 months is a long time in a business. Like you'd understand that.
Yeah.
Things can change quite rapidly. So there is a few ways that we can get around that. In a perfect world, if you can get your financials done by December, awesome. They don't even have to be lodged specifically. They can be ready to be lodged.
Yeah.
But if you can have them done by your accountant and then have them lodged whenever, it'll be less additional information that you need to provide. I've got one specific thing here. So we're part of NAB Health, and NAB Health can actually assist dentists who are working on a percentage of fees to do an application for a home loan or whatever without 2 years financials, because we know that you've just transitioned into that.
Yeah.
So there are ways that we can actually get around it. If you don't have the financials, we can actually look at or rely on management profit and loss statements that you can either generate those on your own practice software, or your accountant should be able to do them, especially if you're using a system like Xero or something like that.
Yeah.
Then there's other means and ways to do things. Ultimately, we'd prefer to have ATO documents. So management figures can be supported by BAS statements, which are an ATO document.
Yep.
They don't show you all the details, but they kind of show you this is the total amount, similar to what's on the management P&Ls, etc. And from that, you can kind of relate it back to this is what it was the previous actual year. There's a great thing that not a lot of people are using it. I've been using it for the last year, I suppose, is the ATO pre-fills.
What's that? I've never heard of it.
Everybody has it under your MyGov.
Yeah.
And it actually shows as a live document, and it's an ATO document, your PAYE income year to date. So if you pay yourself a wage, it will actually show on your ATO pre-fill. Me as an employee, it actually changes every week, every fortnight. When I get paid, it actually changes. This is my year to date. And you can actually go back previous years, get your... I'm a believer that it's as good as a tax return because it's an ATO document that's live.
I guess that's where the whole one-touch payroll thing comes in. That's what it's probably all been done for. Okay, awesome. So let's talk a little bit about collateral, mate, because we spoke a little bit about that's one of the C's.
Yep.
What sort of collateral would someone normally need to have in terms of buying a practice, buying a property? How much collateral is enough? I mean, from a borrower's point of view, we want to put up as little collateral as we have to. From a lender's point of view, you probably want as much collateral as you can. But where's the balance?
For the right client, we will consider up to 100% of the purchase price for a practice. Mm-hmm. We'll consider up to 100% of the purchase price for a commercial property. We will consider the full price of equipment, fit out, things like that. Yeah. So it doesn't say we'll always do it, because if you came to me for a $50,000 car, tick 100% finance. If you came to me and you wanted to borrow $25 million for a high-rise building, I'd be going, hang on, the
Yeah.
It's different based on the amount that you're looking at.
Of course, yeah.
Can I jump back for a second? I'm going to talk about something to do with the C as in character. And that was one of the things that was in my article was the ATO arrears and arrangements.
Ah, yes, okay.
Yeah, that actually classifies as a negative on your character if you've got a tax debt that like an arrangement or a arrears. If you think about it, the ATO are the most powerful creditor out there.
Yes.
They can take all of their money back before any other creditor.
Yeah.
Right? They get first rank. They get it before the banks. If you've got a tax arrears and they decide we're going to call this in, they can do it like that. It's a warning sign up to our credit managers to say these guys had a commitment that they should have met that they haven't met.
Even if they've paid it back since, is that still on their record or not?
Once it's paid back, the documents, the government documents that refers to the tax position, it will actually then show zero.
Zero balance, yeah.
Yeah. But if they've got an arrears or an arrangement, it'll slow the process down.
Yeah.
The credit managers aren't dummies. They see if you've got ATO interest as an expense in your financials, it's kind of a good indication that you had a ATO arrears or arrangement. We would ultimately just like to see them cleared.
Yeah.
It's actually good business management to have your tax up to date, and you don't want to pay it early, but pay it when it's due. And you'd be teaching people this. Make sure you're putting money aside for it.
Oh, amen. We have a separate bank account for tax, to be honest with you, Walsh. We every week we take a portion of the revenue that comes into the practice and we just put it aside for the tax man. And it's a separate bank account, and we kind of look at the balance of that bank account and know that it's not ours.
Yep.
Sometimes it makes you choke a little bit.
Yep.
But at the same time, we go, okay, that's for the tax man. We know when the tax bills eventually come or inevitably come. So we do a lot of work on that.
I know that you have a wide range of listeners, so I'm actually going to direct this to any dentists that are going from being a PAYE into an associate role on an ABN or whatever.
Yeah.
These are times where I've actually seen people get themselves into trouble. So if they finish work as a PAYE today, they don't pay any tax until June 30, right? June 30 next year, 24.
Yeah.
They won't lodge their tax return until April 25.
Yeah.
Right? So in all that period, they may have not had to pay tax. And if they haven't put it aside, that's a year and a half, right?
It's a big bill coming down the pipeline.
Yep. On top of that, they also have to start paying tax for the future year.
Yes.
On a quarterly basis.
Yes.
That's one thing that I would say, make sure you're putting that aside. I've seen people get into a lot of financial difficulty if they don't provision for that, especially if they go, oh, I've got that money and I want to do those renovations to the house. And it's been so long working as a PAYE. I've got this money now.
I've got this money and I feel rich and all that sort of stuff. But it's a bit of a trap, isn't it, mate?
It is. Yeah.
So Ian, obviously, when someone's buying a business or property or whatever it is, there's going to be some sort of contract. There's going to be some sort of documentation around that. What sort of things do you need from, again, someone comes with you saying, Ian, I want to buy X, Y, Z. Do you need the contract executed? Do you need it just not executed? Do you need to review the contract before it's executed? What happens in that regard?
Yep. So there's two situations there. You've got the business one and you've got the property one.
Yeah.
The business one, a draft copy of the contract of sale is sufficient for us to start the process for the application, get it through to approval, but we will need a fully executed copy prior to settlement. In terms of the commercial properties and residential properties, it needs to be a fully executed contract of sale, right? It can't be signed by you and not by the vendor.
Mm-hmm.
Can't be signed by the vendor and not by you.
Mm-hmm.
What happens when we receive a contract of sale for a property now? All of the banks use a system called Valex.
Mm-hmm.
Every bank has to use it. We then have to put the request through Valex to go out to where it needs to be valued through. And one of the things on their requirements is if you don't have a fully executed contract of sale,
mm-hmm.
it'll just get stopped. It will not get progressed whatsoever. The timeframes on valuations has always been a bit tricky, especially in Queensland where we have, we can have 30-day settlement terms. And working back with those days, if you sign a contract today and you give it to your financier next Tuesday, you've already eaten up 6 days of the time frame. If you've got a 14-day finance clause, you're in a bit of trouble. If you've got a 30-day settlement time, you've basically used a fifth of it just to get the document to request the valuation. Now, it's important to consider this at the start. If it's a complicated transaction, a large transaction, you want a longer time frame for finance approval. You want a longer time frame for settlement. A valuation that goes through a registered valuer can often take 14 working days.
Wow.
Working days.
So three weeks?
Yep. Once they've received all of the information. And they may go, well, we've received the contract of sale, we've received this, we now want to see how much rent's coming in, we now want to see how much the expenses associated with that property are, and that's before they can do all the valuation. So I had a recent situation with one of the Savvy Dentist clients, and we basically got everything in really, really early, and we knew that the time frame was an issue. And I jumped on the phone to the valuer, and I basically connected everyone. We got it approved in the time. Yeah, we got the finance approval in the time frame that we needed, which was good. So.
I bet you there's a few beads of sweat dripping down everyone's forehead for that. But anyway, all's well that ends well, right?
Yeah.
Okay, let's just say you're not buying the property, but you're leasing the property. I'm assuming you need some sort of lease document in place in that situation?
Yes. So what normally happens when a person is negotiating for their lease is they'll actually have a meeting. They might sign a heads-of agreement.
Mm-hmm.
Now, the heads-of agreement is not a fully executed lease.
Right.
From our perspective as a financier or the finance industry, we need to know that you've actually got a property, that you've got a legally binding lease, so that you can actually operate from that.
Yeah.
I've been around for a long time, 33 years in finance. I did see a situation where somebody signed a heads-of agreement and it didn't go ahead because the owner died.
Oh, no.
And the inheritant went, I might develop that property. Those type of situations, you can't run through
control,
all the situations that can possibly happen. But from our perspective, we want to protect you, the client, so that you're not losing any money. And we want to protect us because, our shareholders don't want us losing any money. So the fully executed lease will quite often be the slowest document in the whole process. I've got one at the moment where it's been a month and a half after it was supposed to be signed, and it's still with the vendors to sign. So that's slowing the process down. In that type of event, you need to go back to your financier and say, what can we do here?
Yeah.
And then they may need to get special approval from their approvers, their credit there, to see what can happen.
Yeah. So valuation of dental practices is typically very opaque. When you go and buy a house down the road, you can see there's a register of sales. You can see, I actually started studying property valuation, so you can see all the sales history. You don't get that in a dental practice. You don't see all the sales history. You guys probably have internal data around that, I'd imagine. But how are you evaluating what's a fair price for an individual practice? How do you know that your lender is not paying over the odds for the practice?
Sure. I can only talk from a Medfin perspective here.
Sure.
Now, we don't value practices.
Yeah.
That's not our game. We accept the risk associated with a price.
Right.
So if the client can show that they can meet the repayments based on the practice's income and based on their own income, then we would support it, provided it's within a range. And I can't say that range. No. I'm not allowed to.
Yeah.
That's individual financiers will have their own amounts that they would be comfortable with or multiples.
Yep.
So one of the things that I would say is when a person is looking at a practice that they want to purchase, they want to get a certain amount of information so that they / their accountants / their business advisors / their financiers can actually look at that and make an assessment on this is a fair value. As I said, 3 years financials is great because it actually shows that trend, especially in dental. Dental's one that is quite easy to say what you should get, right?
Yeah.
You should get an income by provider number report, which shows every single person in the practice what their billings are.
Mm-hmm.
So you can see who the key people are. Oh, that person's leaving because they're the owner.
Yeah. And there goes 80% of your revenue. Yeah.
That's right. Yep. Or this person is generating 60% of the revenue and they're staying. I better make sure they stay.
Yeah.
I better have a work agreement with them. I better, make sure that they're happy. The second thing is income by item number.
Mm-hmm.
Now, there's no point in buying a practice if you can't do the work that the existing dentist is doing. So if they're generating 30% of their revenue doing endodontics work and you don't do endodontics, well, you either need to hire somebody to come in to do that, or you need to learn pretty quickly, or you're paying for something that is not there.
Yeah.
That you're not going to be continuing. In terms of the multiples, I can't tell you the multiples. You need to talk to your accountant about what's fair multiples, etc. When you're assessing how much a practice is making, you need to work out how much is being generated after the owner's remuneration as if they were an employee.
Yeah.
As if you were paying them. The business is making this much. Are the people who own it, are they paying themselves the right amount? So, and that, as you know, that'd probably be 40% of their gross fees. So if you can actually see how much the income that they've earned from the income by provider number report, you can actually back calculate that.
Yeah.
You need to add back their interest because you're not going to be paying their interest. You need to add back depreciation because depreciation's, whilst it's a real cost, it's an accounting expense.
Yeah.
To work out what we refer to as normalized EBITDA, which is earnings before income, before interest, tax, amortization, and depreciation. Work back that. Make sure you calculate what the owner's remuneration is. I'll give you an example. If you're doing a calculation using 4 times the profit, and the owner's paying themselves 50,000 where they should be paying themselves 200, then that profit is 150 higher, and you multiply it by 4,
and paying 600.
You're a long way off.
Yeah.
Similarly, if they're paying themselves too much,
it might work the other way.
It would work the other way. The other things to consider is their partner, spouse, the practice manager, are they paying them the same as what they would pay a practice manager? You need to consider those type of things. I'm not going to say how we value it.
No, but there's just things to look at and things to think through, right? And that's just stuff to consider.
Yeah. One last thing there. If it goes outside of what we feel comfortable with, or if it's over a certain dollar amount, we may say to the client, we want you to go and seek an independent value.
Yep.
And I'm going to throw this in there because it's an interesting thing. If you were buying a property and the valuation, and it was $1 million, and the valuer said, we don't think it's worth $1 million, we think it's worth 800, would you still buy it? Maybe, maybe not. Probably not. I don't know. Would you take a 200 grand hit?
Depends on how much you want.
Yeah, if the financier is saying, we want you to go and get an independent valuation on the practice, it's really to do that same thing, to say, you need to make sure that this is right. Yeah. And, if you pay too much for a practice, you could find yourself working for the next couple of years just paying back the overs that you purchased it for.
Hey, Walshy, we've covered a fair bit of territory, mate, and I really appreciate you clarifying these things because there's going to be a bunch of people listening to this podcast who will either be looking to purchase an additional practice, maybe their first practice, maybe a commercial property, maybe refinancing as well, and I think there's a whole bunch of things there to consider. So, mate, I just want to say thank you to you for taking the time to clarify those things, those steps, what a financier would look for. Obviously, we've used Medfin as the example, but I'm sure other financiers would use a similar process. But, mate, you're a good man, and I appreciate you taking the time to come and hang with us, especially because you're actually officially on holidays at the moment. So what a nice fella.
Oh, jeez, making me embarrassed. Yeah.
You're a good man. I appreciate it, mate.
Great stuff. Thanks, Jesse.
Thank you for listening to the Savvy Dentist podcast. For more episodes, go to drjessiegreen.com/savvydentist. And to discover how to build a high-performance dental practice, visit drjessiegreen.com and download the free report.